Hello, I'm Finola from RaaS, and today our focus is on Ricergrowers trading as SunRice, ASX ticker SGLLV. And joining me to discuss the company's recent interim results and current trading conditions is Group Chief Financial Officer Dimitri Courtelis. Welcome, Dimitri, and thank you for joining me again.
Thanks, Finola. Always good to chat to you.
Dimitri, globally, the rice industry has experienced some challenges over the past 12 months. With drought in the Northern Hemisphere, the Indian non-basmati rice export ban, and generally higher prices. What impact have these factors had on the SunRice business over the past 6 months, and how does the unwinding play out for the group?
Cool. So there are a number of moving parts, particularly in the international segment and rice procurement generally. But if I just start with the Northern Hemisphere, US, and then into Europe, and then I'll get into the subcontinent. So whilst the US are now out of their drought, we were initially expecting that period to continue into a 2-year type of cycle, as is what's experienced in Australia in the past. But they've really only had 1 year of a severe drought that they are now out of. So that has put a bit of pressure on medium grain pricing, and we are seeing that price come off. So Creed pricing, for example, out of the US, which is the benchmark tender price for the Japanese tenders, is now sub $1,000. I mean, that price has been up to about $1,500 in the last 8 to 12 month period. So we will see a lot more volume of rice come back into the market from our American competition set or competitive set. And then, of course, Europe as well, but not to the extent of the US. They are still struggling with a little bit of overhangs from drought. But that's primarily, Italy, the arboreal type of varietal that comes from that part of the world. And then, of course, the subcontinent with India, the non-basmati ban. We understand the elections in India are expected to take place around April next year. So we expect to see pricing hold firm until that stage, and then potentially start coming off beyond that. So that's more into the long grain side of the market, the fragrance, the jasmines as well. So again, with the strong brand set that we have within our portfolio, we look to hold price and volume within our markets. As I said, a number of dynamics at play, but we are able to source from a number of different jurisdictions. So again, participating with those countries that we trade with, a number of initiatives that we're working on. So whilst a lot of moving parts, we're still feeling confident in terms of the outlook and the rice's buy and sell from our international segment in particular.
And despite predictions of El Nino, SunRice appears confident of solid rice harvests well into calendar year 2025, which implies revenues well into FY26. What has given you this confidence, and do you have the end markets to satisfy the supply?
Yeah, so at the moment we've got some healthy volumes of rice inventory in our sheds, and that's then complemented with the rice that we've now planted, or the growers have planted, that we expect to harvest around April next year. So that's really going to take us into a really good C24 season, which we're expecting. And then with the carryover strategy that we have, to your point, at least 2 or 3 years ahead of us from a runway perspective in terms of Australian rice available to sell. Again, the global markets, which primarily is where we sell our Australian rice into, it's long-standing brand resonance, and those distributors and customers, again, back-to-back contracts from an annual basis perspective. So we're confident with the rice that we're growing in Australia. We have those homes overseas, and that's just a continuation of our existing strategy. But again, pleasing to note that for the foreseeable future, at least that 2-3 year period ahead of us, the Australian rice pool being in equilibrium with absorbing its full share of overheads. Of course, the operating footprint fully utilized, and not expecting any shortfall there. So it really gives us the ability to go after international strategy and growth plans and increasing market share. Yeah, a pretty solid base in terms of what we're now working off.
And a slowdown in US volumes looks to have a potential home in the form of new tenders of Japan, for example, as you mentioned, and the Australian-UK free trade agreement. Can these markets offset US volumes, and what other avenues are there for Australian rice?
Yeah, to an extent. I mean, the FTA was agreed earlier this year. Volumes aren't too substantial, and it will take some time to grow that brand resonance in that market in particular. There's no such FTA equivalent with the EU. I mean, that's something that we're also trying to get the support of the Australian government to give us a bit more access into that market. It's not a one-for-one in terms of making up through that FTA strategy, on the back of the US drought, to your question. But again, a lot of existing opportunities in current markets that we're operating in, and of course new markets that we're looking to enter and expand the brand portfolio. So again, a number of exciting initiatives that the team's working on. So I look forward to bringing those to the market in due course.
And Dimitri, just turning to the results, I mean, I think the standout for us was really the CopRice business, which delivered a great interim result and continues to turn around. What can we expect from the group for the remainder of this year and into next year?
So yeah, very happy with the CopRice outcome. They delivered an EBITDA of just under 8 million, which was almost double the same level last year, or the same EBITDA last year. So again, a lot more initiatives that the team's working on. We believe we've turned around the base business, getting through the drought and COVID and all the acquisitions we picked up that introduced a lot of capacity into the network, that we now have some sustainable business to essentially back all of that operational space, which is a positive. And then of course the pet food strategy in particular is really starting to evolve. It really is a category on trend, and we see a lot more growth in that sector as well, which we're looking to pursue. So yes, I think in terms of what the market can expect from CopRice, more solid growth. We still have a number of areas that we're working on to fulfill the capacity and ability of what the team can deliver on. But again, a very positive outcome in the CopRice segment, and now contributing the better part of about 12 or 13% to group EBITDA, and looking to grow that further in due course in a branded segment as well.
And of course, the group overall produced a very good result, stellar result, and the board increased the interim dividend by 50% to 15 cents per share, which must reflect the confidence that the company has moving into the second half. Could you talk about the decision to increase the dividend, and should we expect to see the final dividend at the very least maintained?
Good question. This is now our third interim dividend, and as we stepped it up from 10 cents to 15 cents, hopefully sends a strong signal to the market in terms of the consistency of earnings and the ability to navigate through the seasonal cycle, as we really are repositioning this business from an agri player in the past into more of a global FMCG style player. And then hopefully that re-rate will come over time as well. So again, the board is extremely mindful of rewarding our B-class investors, and the dividend is one of the key levers to demonstrate that. The track record is now hopefully starting to speak for itself. We've had a very healthy dividend, and it has grown. It's been consistent and grown over time. So the 15 cents based on the track record should hopefully give the market a bit of foresight in terms of what to expect at the year end, but absolutely top of mind in terms of rewarding B-class shareholders. And we've had some solid results, to your point. So on the back of that, returning that cash to shareholders is something we were able to achieve and very proud about.
And SunRice's strategy in recent years has also included M&A. Is this still a core part of the company's strategy, and are you seeing opportunities present in this market?
Yes. The M&A pipeline is as fulsome as ever. We continue to look at a number of initiatives at any given time. Again, look forward to bringing some exciting news back to the market when we're able to. But absolutely, yes, it's a core pillar of our strategic initiatives and our growth plans to complement the organic growth from our base businesses, and supplementing that with inorganic activity, particularly in the M&A space. So we've got non-core assets that we're looking to divest and reutilize that cash flow within accretive type of business sets. So we'll look forward to again updating the market when able to. But yes, M&A is absolutely a core component of what we're working on at the moment.
Well, thank you, Dimitri, for joining me today. I'm looking forward to catching up with you over the course of the next 12 months to check in on SunRice's progress.
Thanks, Finola.